And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by Absa Corporate and Investment Banking, a Pan-African bank that's invested in your story because your story matters. Good evening. Welcome to The Money Show tonight. Another day with another long set of results to talk about. They all tell you something about what's happening in our society and in our economy, whether it be Woolworths and the fact that their food section is still just growing incredibly quickly by 9% compared to last year. That really does tell you that people, despite the premium price, are seeing value for money. We'll talk about pricing when you speak to their CEO in a moment. The CEO at Spur, already on hold for you, Val Nitjas. Interesting just to see how people are still going out, it seems, despite what we keep being told is a constrained environment. I was very interested in Curro's results today, and we'll speak to their CEO as well. Their number of children in Curro schools is only up by 1% on this time last year. And for ages, for years, there have been people in the sector warning that there was not enough demand to keep it growing. In other words, everybody who could afford to send their child to a private school and was going to decide to do that pretty much had already decided to do that. And that whole sector was pretty much at its max. I wonder if we're getting to that point now. A few other questions around the IEB syllabus I'd like to ask the CEO at Curro as well. Good to hear from you as always tonight. 011 883 0702 021 446 0567 and voice notes this evening on 072 702 1702. Don't forget, by the way, if you miss it tonight, you might want to go and check out the podcast tomorrow. But we are speaking to the CEO at SAA, Professor John Lamola, tonight. He's done some very interesting things in his time in academia, but also not quite a side interest in aviation, much more than that. Incredibly well qualified, was on the board at AXA at one point. But we'll ask him about how he's managed these two tracks, an academic career and a career in aviation. But also just interesting to put some questions to him. As you know, it's been a bit of a rocky deployment or appointment or whatever you want to call it. So we'll talk about that this evening as well from 7:30.
702. Stephen is on The Money Show.
6 to 8 p.m.
Well, the Spur Group of restaurants reporting today. Profit before tax up by 12.9%. Its franchised restaurant sales were up by 10%. And if you consider that everyone talks about how they don't have any money, how most of us are feeling cash poor, and how expensive eating out can be relative to having a braai at home, that does tell you that people are still very keen to go out. Val Nitjas is the CEO at Spur Corporation. Val, good evening to you. Good to talk to you again on The Money Show. I mean, people complain that it's too expensive to eat out regularly. Your sales figures of a 10% increase suggest that people are finding the money somehow.
Good evening, Stephen. Yes, look, I think if you look at why people go out to eat, I think they're always looking to treat themselves or their families, and it's sometimes easier because you don't have to cook at home. But I think people are constrained. So if I look at our foot count on some months during this last reporting period, I think people are taking a bit of strain. But I think our restaurants are sort of positioned in economically viable areas. So I think there is spend, but I think people are under strain, especially if we look at the incidence of or the high percentage of redemption rate for vouchers. That's saying everyone's looking for a little bargain. You know, what can I cash in? Where can I get a good deal? So yes, I think we'll always love to celebrate in restaurants, but the consumers are still taking a bit of strain.
Is it the same families or the same groups that keep coming back? Is it about some sort of brand or even familial loyalty for a lot of people?
I think we've got a high degree of loyalty, and we see that in our numbers and stats on our family club. So people do return. Our loyalists have got a high frequency rate. And then, of course, as you open new stores or you market differently, you attract some new users as well. So we like to do both. But yes, we've got at least over 50% of our transactions are from our loyal customers.
Inflation and food price inflation in particular have been very low over the last few months, around 3%. Does that put you under pressure in terms of price? I mean, are you able to raise prices if you need to make sure you have enough of a margin?
Yes, we're always very cautious because we can't transfer all the food inflation across to the consumer. So we're always sure that we've got good known value items. So it has come down quite a bit. There are some categories that are still high, like coffee. We anticipate it's going to continue to have a high increase. Oil has become a little bit better. So we can't transfer everything, no, unfortunately not.
You closed 5 restaurants, you opened 12 new ones during the period. Where are you finding these opportunities for growth? Are there still markets in certain places, in certain cities? Please give me a reason to be optimistic about Joburg, Val.
Yes, no, we will. Actually, we opened 21 in South Africa and 12 in Africa, and then closed, I think, 8 in total. Yes, there's still opportunity, maybe not in the big metropolitan areas, but if we look at some of the smaller towns, more sort of peri-urban areas, there are lots of new developments. So, no, there is still a lot of hope. I think if you look at all the households that are going up and the developments in housing, the schools as well. I heard you saying you're going to do an interview soon. So the schools are all opening up everywhere, so there is opportunity still. We definitely haven't reached saturation yet.
I mean, I do notice if you drive around South Africa out of the big urban centres, I was in a much smaller town than Joburg in the sort of Secunda area, and I noticed there was a Spur there, and there was a Spur there. I mean, they do seem to be all over the place.
You remember our old commercial Spurs everywhere. That's why.
Long time ago. You've bought into the Doppio chain, I think it's 60-65%. It's a bit more upmarket than Spur, perhaps. Is there a particular market you're trying to tap into? Are there one or two other acquisitions you've made as well?
Yes, so Doppio definitely fits into what we call our speciality portfolio, and because they dominate in 3 day parts, but do a much bigger day part than our Hussar Grill, it was a lovely complementary brand to buy. So those 2 brands now represent almost 77% of our speciality portfolio. So yes, it is more of a middle to upper income bracket, but it's got also very affordable options, smaller eats, lovely breakfast or a lovely small bowl. But yes, it is a little bit more bespoke than a mainstream family restaurant that Spur is.
Val Nitschas, thank you very much indeed. Do appreciate it. CEO at the Spur Corporation.
The Money Show on 702.
Monday to Friday, 6 to 8 p.m.
Well, Woolworths announcing today it's cutting its interim dividend by 25%. Its clothing lines, both here in Australia, not doing as well as perhaps Woolworths would like. Its food stores, though, growing at a tremendous rate. Food sales up by 9%. If you consider there are cheaper options, that's a very large number. The CEO at Woolworths Holdings, Roy Bagatini, joins us now. Roy, good evening to you. Let's just start with clothing. Your clothing line seems to be battling just a little bit. In South Africa, some issues with the distribution centre. Are these issues now resolved?
Yeah, good evening. Good evening, Stephen. Thank you. Yes, no, I think both clothing businesses, obviously operating in pretty constrained macros, but much more so in Australia, and I guess we can touch on that a little bit later. But our main issue with our performance in the first half was the inability for us to get product out of our distribution centre and into our stores at what was the most critical time for us over the festive season, and that really cost us some top line. Good thing is that it's resolved. It's behind us now, and we're back to where we needed to be.
What caused the problem? I mean, are you about to use the phrase IT issue?
No, I'll try not go there. It was more of an execution of an. I mean, we've been sort of turning the fashion business around for some years now. We've made some very good progress on that. We've been driving better product and through that better quality of sales and net improving the overall financial health of that business over the last couple of years. I mean, we've doubled our profit margins, but to sustain that, we really needed to lift profitability, basically, we needed to invest fairly significantly in what we call back-of-house capabilities, which is somewhat systems-focused, and it is mainly focused around inventory management. And we're well down the track with that, but we had one component that we were implementing in the back end of last year, and unfortunately that just candidly did not go according to plan. And we were in the thick of it, and we just needed to limp through to the end of the season. We, as I say, have resolved that, and and that now is behind us. But it all related to the flow of inventory and the management of inventory, basically. And as I say, good news, we're pleased that that's behind us. It was very frustrating for me, for our teams, but good now that we're, as I say, on the right path.
Your food business still shoots the light out. I mean, there's clearly very strong demand for your products, Roy. And I mean, anecdotally, you still see that. I was interested, though, in your SENS statement. Price movement in your food stores was 6%. ShopRite told us yesterday price inflation in their stores was only 1.9%. In fact, 35% of their items saw their prices going down. That's quite a big difference between you and ShopRite.
Yes, I mean, well, for a start, I mean, we are very different businesses, but I mean, there are two main reasons why our inflation is a little higher, and the first one is our mix of products. We're seeing higher inflation in key categories where we have high market shares. For example, in coffee, chocolate, and produce. Where we have seen prices drop is in the commodity lines, heavily maize-based or rice-based, which are much bigger components of our peers' baskets. So that's the one thing. And then secondly, we are selling more of our product at full price. That's really testament to the value customers see in our product. But I think what is important is that we're not lifting prices. In fact, we're continuing to invest in price. We've invested over R1 billion in pricing, not to mention the other investments we make in product quality and new product development, etc. And that strategy is continuing. It has fundamentally shifted perception in the market around our overall value proposition. And in fact, when we look at our customers, I mean, we've increased our customer base by over 8% during the period, which is a phenomenal number and speaks to, again, the value and the trust I think customers put in our proposition.
So, I mean, I hear you, and I mean, I can't really argue with a figure of 9%, but if you keep increasing prices at 6% and Checkers doesn't, people are going to notice.
I mean, I'm sure they do, but I mean, at the end of the day, it's not just price that makes the difference. I mean, we have what we call a sort of holy grail of premium food retailing. And I might have mentioned this to you before, but we certainly on the one hand have the best customer offering in the market. I mean, and certainly over the last 6 months, we've done a lot to sort of support that. I mean, our Dash numbers are up significantly. We've invested this $1 billion in price. We got 10 to 15% of revenue every single season, which is through innovation. We continue driving into new categories, our next generation stores. We continue to widen the gap between ourselves and our competitor. And our credentials that we have in this food space are, speak for themselves. They are homegrown. And they do come through the fact that we have this unique and exclusive supply base. So we do all of that on the one hand, and that leads us to these significant growth numbers that you're seeing. Sector leading, I mean, like-for-like sales, the best in the sector. Total sales growth, the best in the sector. We have the highest operating margins, and we certainly have the best return on capital. And so this delivers for shareholders. So when we talk about our holy grail, it's sort of on the one hand, you've got this this very compelling offering for our customers. On the other hand, a very compelling outcome for our shareholders. And we do that at scale.
Woolies Dash, obviously, like all delivery services, your customer base is growing very strongly, and we can sort of look at the different numbers if we need to. But how ambitious are you for Woolies Dash? I mean, do you see a very significant portion of your sales going to be on Woolies Dash or through delivery rather than through a store in 5-10 years' time?
Yeah, I mean, I think we are, what we are really sort of led by here is customer and where the customer wants to shop and the whole concept of convenience and how we can bring what we do to her in the most convenient way. And so Woolies Dash will continue to grow. I mean, we grew 70% last year. We're up 50% in this first half. We have expanded the number of stores through which we can service the Dash offering. We cover around 96% of our customers through that. So there's still opportunity and upside to this. We currently sort of have around 6% of our revenues coming through our online channels. And we certainly see that sort of tracking towards 10% over the next couple of short years. But we're doing that through not only expanding, distribution points, but also the capacity within each distribution point. So what we call slot capacity. And we do that through, we provide the service through what we think is differentiated. We have a cold chain that is uninterrupted. We have great drivers, at a caliber and a quality that we think is relevant and appropriate to who we are as a brand.
Your clothing business, obviously, as you say, issues being resolved, but your food business is kind of doing so well that I do wonder if there's a bit of a differentiation, or they're almost going in slightly different directions. Is there a conversation in a corridor somewhere about separating them? There's no need to keep food and clothing together, surely.
Yeah, I mean, I think that is a question often asked, particularly when a business is underperforming. I can say that if our business had not had this setback in the half, and we had delivered according to our plan, we would have seen very different numbers. And I don't think this question would be on the table. We do have a very unique proposition, where you have a remarkably impressive food business, and I know it sounds arrogant, so forgive me for saying that, but really a great food business with a fashion business that is core and central to the South African consumer and the South African family. But we also have a beauty and a home category as well. So we really we offer all of this in one shop. We do need to just get our make further progress on the turnaround strategy on fashion, and I think that question will become academic.
Roy Bagatini, thank you for the time. Really appreciate it. CEO at Woolworths.
The Money Show.
The markets.
Chris Stewart's portfolio manager at 91. Well, a very bullish Roy Bagatini there, Chris, and certainly Woolworths Foods in particular, still doing extraordinarily well.
Yeah, good evening, Stephen. Yeah, a good performance from the foods business, as you indicate, even stripping out the acquisition of Absolute Pets, which one needs to just to get a better look at exactly what the top line's doing on a like-for-like basis. 7.3% like-for-like growth is a reasonably credible performance. They've managed to increase their GP margin. They continue to invest quite heavily in that business, so their adjusted operating profit only grew sort of in the high single digits range, and their operating margin still a little bit light of target. But generally speaking, a good performance from the food business. It's just a little bit of a shame about the rest of the business, both fashion, beauty and home, as well as the Country Road business, struggling over the period. Some idiosyncratic issues perhaps within fashion, beauty and home over the period, but nonetheless, if I had $1 for every time we've said that the Woolies food business has had a fantastic period and the fashion, beauty and home period has struggled over the last 20 to 25 years, I'd be a rich man. Continuing to struggle a little bit there in the Country Road operations in Australia. They are trying to reconfigure that operating model. But sales down, GP margin down, adjusted operating profit down 70-odd%, and a strong hint, I think, that they're going to have to take an impairment of the value of that asset in the second half of this year.
Old Mutual down 5% on the day. They had a little bit of an update, but quite difficult to decipher what's actually going to happen. Yeah,
I mean, first of all, life companies are notoriously complicated from an earnings perspective. They don't perhaps do themselves any favors because they have 15 different definitions of, adjusted headline earnings and headline earnings and basic earnings and results from operations. But, even allowing for all of that, the ranges that Old Mutual have provided today are singularly unhelpful, with the results from operations going to be either somewhere between down 6% and plus 14%, and adjusted headline earnings are going to be up somewhere between 4 and 24%. Now, they're reporting results in a week or so. This is for the financial year end at 31 December 2024. You would think that these ranges could be slightly narrower by now, and there would be some more information to come from it. But, if you take the midpoint of the range, I guess a little bit of a disappointment being expressed by the market, given that, Discovery, who've reported recently, Momentum and Sanlam, both of whom have put out pretty bullish trading updates. Old Mutual perhaps a little bit less bullish in the market voting with their feet today.
I mean, Quilter, strong numbers from them. Their market loving it, up nearly 6%.
Yeah, from a stock, two stocks that were down in the mid-single digits. We've got one that was up in the mid-single digits on today's results. Quilter up almost 6%, up almost 10% at one point during trading, beating on adjusted profit before tax, up about 17% year on year. I think that was about 4 to 5% ahead of what the market was looking for. Solid net inflows into that business of about 5 billion sterling, and providing guidance of somewhere around 5% net inflows they would expect in assets under management and administration for the year ahead. That implies another £5 or £6 billion to come in. And I guess to the relief of the market, and I think this is quite interesting, they have quantified the provision that they've created for the ongoing advice issue. Remember, they've been under regulatory scrutiny along with a number of the wealth management businesses in the UK as to whether they've been charging clients on an ongoing basis for advice that they haven't necessarily been provided. They've provided a provision against that of £76 million today, possibly a little bit more than what the market was looking for. But I think relief that perhaps a number's been put out there. And that's quite topical. I guess we've got first round reporting tomorrow morning, and everyone's going to be waiting to see whether they are indeed going to top up the 140 odd million that they've taken, pounds, that they've taken in provisions against the UK Motor Finance Commission issue. We'll find out, I guess, first thing tomorrow.
Indeed. Chris Stewart, thank you very much indeed. Portfolio manager at 91, just after 6:30.
The Money Show with Stephen Grootes is brought to you by Absa CIB, a Pan-African bank invested in your story and the potential it can unlock because your story matters. Absa is a registered FSP.
6:45 the time. Well, I'd like to ask from you, as you hear the sort of parade of CEOs delivering their results and answering questions about them, if any of the comments that they make actually change your behavior. In other words, your buying behavior, your shopping behavior. Do any of them change the choices that you make, whether it be about buying groceries, because you've heard conversations with Woolworths and ShopRite, whether it's about deliveries because of 60/60 and Willie's Dash, whether it's actually about education or anything like that. Is there any particular difference in your behavior or something that you think actually struck you as interesting? 011 883 0702 and 021 and 021 446 0567. And on that point, Cashbuild's results showing that consumers still seem to be under some pressure. Headline earnings up just 1%. Revenues for pre-existing stores up by 4%. Cashbuild closing some stores. It opened 3 new ones and refurbished 14. Werner de Jager is the CEO at Cashbuild. Werner, good evening to you. There were some expectations, in fact, that things would get a little more enabling for companies in your business. Maybe the two-pot pension system, lower inflation, might lead to more innovations, more home building. From what I can see in your results, it doesn't seem to have happened.
No, it doesn't seem to have happened in the past 6 months for us. It's very interesting when you look at the Stats SA figures from retail sales. All the retailers are up except the hardware and paint and glass section. So it shows you that our category is still not being spent on by consumers. It's obviously a discretionary spend, and people don't have the money yet to embark on big projects.
I mean, Ital Tile, they're not necessarily a direct rival to you, but they're kind of in your sector. They suggested in their results this week it had to manage what it called predatory pricing by distressed rivals. I presume that suggests that a lot of people across your sector are battling to make money and maybe undercutting each other.
Yes, I mean, we ourselves have been very sharp on pricing, because that's one of the ways that you draw consumers into your business. And for us, offering good prices on quality materials makes a difference. You know, we can offer very good prices, but then the quality is not there. And we as a business will always make sure that we deliver quality at very good pricing.
Your selling price inflation was only 1.5%. I mean, that's well below CPI. It must be quite tough to keep costs down like that.
Yes, it has. We didn't pass on everything we got from our suppliers onto the consumers, so we did see a bit of a retraction on our gross profit margin. But that's what we need to do in these tough times. You know, the one good thing for our business is we need customers in store, and we've seen in the 6 months that we've actually had more customers, 7% more customers through the doors, which is encouraging for the future.
I presume there's almost too much competition for you to put up prices. I mean, it really is, because of the state of the market, quite competitive.
It is indeed, yes. It's everybody is keenly watching what the other persons are doing, and we on cement we adjust pricing on a daily basis because it's so competitive.
Gee. Are you seeing changes in what people are doing with, in other words, the products that they're buying? I mean, are you finding that people are buying, more of one product and less of another product? That gives you any insight into their behavior, or what trends we might be seeing in the sort of home renovation space? I realize that can be quite difficult to tell sometimes.
Yeah, we've seen that in the past that the decorative categories did very well, the paint and the tiles and that. But what we've seen now more recently in the 6 months is that the wet trade, the bricks, the cement, those type of products are starting to do better and showing better numbers, which is an indication that hopefully consumers are starting some projects again and doing actual physical building and not just small renovation projects.
What would make a change? Lower interest rates, lower inflation, all of that might lead to more home sales?
Yes, it would. In our market, employment is critical. So we need job creations. We don't need ArcelorMittal's closing down and lots of job losses. We need in our sector people to be employed.
Do you notice big differences in different regions? I mean, everybody talks about the difference now between the economies of Gauteng and the Western Cape, for example. We spoke to the CEO at Spur earlier, who was talking that growth for them is not really in the bigger cities, but in the sort of peri-urban areas. For building, we saw that for a very long time. It was more sort of rural areas, rural towns, where people were doing very well. Is that momentum sort of drying up?
No, we've seen exactly the same. In our rural stores, we've seen growth of 10% on sales, whilst in the metros, we've actually had a negative 2% growth. So it's very much the metro people that is not doing that well, but on rural areas, they seem to be going ahead.
Werner Diacha, thank you very much indeed. CEO at Cashbuild. Interesting to see what people are spending money on and what people aren't spending money on in these tough times.
The Money Show
with Stephen Grootes.
Well, still plenty of questions, of course, tonight about some of the results that have been coming through this evening. And I noticed that the Transport Minister, Barbara Creecy, dealing now with the fallout from the fact and the ruling and the finding that, in fact, her department, the Ministry of Transport, should never have got involved or never actually gone ahead and done what it did regarding that deal to actually have to buy and basically spend a huge amount of money on one driver's license card printing machine. I've never, for the life of me, understood why it is that the Transport Department has sort of gone this route. To have one machine to print a driver's license card seems to me insane. To have a huge amount of money to have a process that costs so much money seems even stranger, frankly. You almost wonder if it's tailor-made for some sort of reason. I couldn't imagine what that reason could be. But just a very, very strange situation that the Transport Minister, Barbara Creecy, is going to be dealing with for, I think, quite some time. And just a reminder, if your driver's license card is about to expire, your driver's license never, in fact, expires. Only your driver's license card expires. In other words, if you don't have one, you pay the fine for not having one. You must legally have one, but it doesn't mean that you don't have a driver's license. Your insurance, of course, as you know, stays in place no matter what. There have been various hearings on that. Good to hear from you tonight on 011 883 0702 and 021 446 0567. Voice notes coming in on 072 702 1702. Still quite a lot to talk about if you consider the results that we've seen from ShopRite yesterday, from Woolworths today, and just to sort of understand what is happening in the economy. It does show you what people are actually prepared to spend money on. And food, obviously, is something that people are prepared to spend money on. Be interesting if you look at sort of retailers in a slightly different space. So if you look at retailers, for example, in the big home electronics categories, what kind of changes you're seeing there, and if, in fact, they're able to increase their sales. Somehow, I'm afraid to say, I don't think so. I think I probably doubt it, and that, I suspect, gives you an indication of what people are spending money on and what they aren't spending money. Good to hear from you, though, on where you would be spending your money if you had to go to any supermarket. Is it just the one near you? Is it the one that has the fastest delivery time? maybe it's just the one with one particular product that you quite like. And certainly you think Woolworths would compete there, for example, in terms of reach. I imagine the Checkers 60/60 app. But there's so many others now. Woolworths Dash, Spar, Pick and Pay, they all have one. And just to sort of get an understanding of, how quickly they are able to get food to you, one does get a sense that, in fact, we're not going to see any kind of slowdown in this market, that we're actually going to see it moving very, very quickly and for quite some time, certainly would be the prediction on that. Don't forget, by the way, after 7:30 this evening, we'll be speaking to Professor John Lamola. He is the new CEO at South African Airways. A couple of questions to put to him about the operating model for SAA, and by which I mean talking about the fact that you have a government-owned airline, and whether that will in fact still work or not is one of the questions, and whether that sort of time has passed. There are, of course, I think still some governments have given up on the idea, and the way things have panned out, he finds himself in this position. So we'll talk to him about that. Also, a fascinating background as well over the years, been doing many interesting things. So we'll find out a bit more. He'll be your shapeshifter this evening on The Money Show. Just to remind you, of course, what we saw with Cashbuild's results and the fact that they seem to be battling at the moment, and so many people in that space seem to be battling. It is an indication, I suppose, of really the difficulties that people are having in terms of discretionary income. And it goes back to the point that if you are going to spend money, and you're going to spend money on maybe short-term consumer items, by which I mean food, something vital, obviously, rather than spending money on sort of investments or investing in your home, simply because there isn't much point in doing that at this stage. And I know that there have been various suggestions that, in fact, spending money on your home in certain cities isn't really worth it anymore, simply because of the fact that it is just becoming more and more expensive just to manage a home and to keep a home. So plenty of questions for you tonight on The Money Show.
The Money Show
With Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app.
and DSTV channel 856.
Well, one of the things we'll be talking about in a moment is the situation around phones. I mean, for so long, I've always found that whenever you get a new phone or someone talks about a new phone, you find actually that there's nothing really new about it. I understand that is now changing. The World Mobile Congress is underway in Barcelona. We'll be live to that in a little while. 011 883 0702 021 446 0567. Hartman is on the line from West Rand. Hartman, good evening. You look at all of these retailers giving us their results. What do you make of it?
Good evening, Stephen. The commentary seems to be that a lot of these retailers are absorbing price pain on their end and not passing those prices through to the end consumer. So my question would be, it would be quite an interesting exercise to determine what the actual inflation rate would be on my pocket had these large chaps not been so kind to us.
I suppose so. You can also then work out how much each one has absorbed and how much each one has passed on.
Exactly. It would be a very interesting exercise to see how that would affect the eventual stats that are presented to us.
Yes. Hartman, thank you very much indeed. I mean, pricing is important. It's not everything, as we know, but we know that pricing, of course, is important, and probably the biggest determinant. Hartman on the line there from the West Rand. Be interesting to hear if your behavior is changing simply because of what you've heard about how it is that companies and retailers are doing and how they're making their money. In other words, how they're trying to compete. We do know, of course, that the food business and the retail business in particular is incredibly competitive. And in fact, you find that people, work very, very hard and invest large amounts of money in what, for the moment, still called the science of shopping. When you see certain things, it's not by accident. Someone has actually thought about it very deeply about how to manage that. In the next hour, Professor John Lamola, we'll speak to Wendy Nola, we'll speak to Arthur Goldstuck as well. You at The Money Show, good evening. It's 7 o'clock.
And now, The Money Show
With Stephen Grootes on 702.
Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by Absa Corporate and Investment Banking, a Pan-African bank that's invested in your story because your story matters. Good evening. Welcome to the second hour of the program. Plenty to come. We will, of course, speak to the CEO at SAA. If he's able to brave the rain, it is incredible out there in the Gauteng area. If you are there, just please be careful. I think a different picture in Cape Town tonight, but the traffic is, I would imagine, really quite dangerous. It has been raining very heavily for quite some time in parts of Gauteng. Some reports of really big disruptions. So do just please take it easy in the traffic. We'll remain with you, of course, and make sure that you're still you're okay and that you get home safely. So we'll speak to Professor John Lamola. We'll also speak to Wendy Nola, and of course find out a little bit more about how your cell phone is about to change. You know the number, 011 883 0702 021 446 0567, and of course voice notes tonight on 072 702 1702.
The Money Show
with Stephen Grootes, live on 92.7 and 106 FM, streaming on the Prime Media Plus app
and DSTV channel 856.
So for probably the last 5 to 10 of the last cell phones I've had, they were basically the same thing. Lots of promises, but nothing really new, slightly smaller maybe. A radio guy needs a camera, seriously. But this week in Barcelona, the Mobile World Congress focusing on what is really claimed to be a new way of doing business via what is called, I hope I get this right, agentic AI. Arthur Goldstuck is, of course, the person to talk to about these things. He's at Worldwide Works. Arthur, good evening to you. This sounds like something that is genuinely new. I've been lied to before about this. What is it really?
Stephen, it's pretty new. The first time people started talking about it was about 6 months ago, which in the world of media and consumers, that's like yesterday or this morning even. The concept of agentic AI, as they call it, is that you are going to have AI agents doing your bidding for you. And these aren't people being sent by the US or Chinese government to check on you, but rather you using AI to be able to do simple things, but a lot of simple things that would have taken a long time, doing them almost instantly through AI tools. The agents are, you could say, personas, almost like a personal assistant that will do your bidding for you, but it's all through apps. But combining apps that in the past didn't talk to each other.
Okay, so we've had like sort of Siri and Bixby and a couple of other things. This is something a lot more complicated and a lot more, dare I say, productive than that.
Yes, exactly. So in the past, you had, for example, Siri or Bixby or Cortana or any number of virtual assistants that would answer questions for you when you asked them. But what they were really doing and still are doing are just searching for the answer and giving you the answer in a kind of glorified search engine. What's happening now is that the AI agent is able to, you could say, navigate multiple apps instead of the user having manually having to call up each of these apps and do something. The agent takes over the process and handles the interaction between the apps. So it means, for example, you can say you want to book a flight to such and such a place, and the AI agent knows what your budget is and knows what your calendar is in terms of the time that you can take it. It will then go and negotiate the rates. It'll find the flights. It'll find the cost. It might ask you just to approve the amount that it's found that you have to spend. It then books the flight and then not only books it, but sends you confirmation and puts that confirmation into your calendar. And in your calendar, it then also sets notifications to remind you, to also guide you in what you should be packing, etc., etc. All depending on how you initially prompt it, what you ask it to do for you. So in effect, it's basically doing or taking a whole lot of steps without you having to intervene or with minimal intervention. And the idea is to simplify your life. If I can perhaps give you an example of how it's being described as mobile world, though, it's different here. It's not about the consumer so much. as about the telecommunications operator, because that's what Mobile World Congress is all about. It's about the carriers and the suppliers to the carriers. So Huawei have announced an experiential agent, for example, that a carrier like a Vodacom or an MTN, both of them are here, by the way, but they would be able to use this experience agent to analyze the behavior of every single one of their customers and personalize an offering or a service or even an app for that specific customer. In the past, I talked about being able to personalize on a mass basis. This is personalizing on an individual basis, and it wasn't possible before AI or before AI agents, for that matter.
When it personalizes, it needs to learn and to know a huge amount about me. I mean, I can just imagine all the issues that'll come up.
Well, the funny thing is that they used to have proxies for knowing about you. And by proxy, I mean an equivalent to evaluating your behavior. So, for example, if you didn't charge your phone regularly and you allowed your phone to die before you recharged it, that would be a proxy for poor decision making, and therefore you'd be a poor financial risk. So just on that basis alone, they might decide not to give you a loan or to offer you a loan, for that matter, through their financial services. But what now happens is they are able to automatically pull together your entire behavior profile, from how often you make calls to how well you pay your bills, or how often or when in the month you pay your bill, all the way through to when you charge your phone. And that combination gives them a very deep profile of who and what you are.
Is there any way to not give them that kind of information?
Yes, you can opt out. That's going to be a critical element of it. In fact, I spoke to an expert from Kaspersky, the antivirus and cybersecurity people, and they said that the great danger of these agents is the lack of autonomy by the human being. It's all about autonomous agents and not enough about autonomous humans. And they see a danger of manipulation, but also a lack of adequate user oversight. And the example he gave me was, if an agent booked a flight and paid for it without consulting you because you didn't put in place the proper guardrails, as they call them, it could actually create tremendous damage for you.
Arthur Goldstuck, thank you very much indeed. Founder and CEO at Worldwide Works, live tonight from Barcelona at the Mobile World Congress.
The Money Show on 702.
Monday to Friday, 6 to 8 p.m.
Just time to squeeze in another results interview. The private education company Curro saying today that it's increasing its final dividend by 13%. Its headline earnings per share were up. The company does seem, though, to be battling to increase the number of learners in its school. The number of children at Curro schools is up by just 1% compared to this time last year. Kobus Loubser is the CEO at Curro Holdings. Kobus, good evening. I'm glad we were finally able to get through to you tonight. You increased revenue by 8%. Your profit was just under 100 million rand. But how are you feeling about the numbers of learners in your schools at the moment?
Yeah, thanks for having us and for taking an interest in Curro. I mean, I think if I reflect on 2024, it was an exceptional school year for Curro. We had record matric results, record achievements in sports and culture and participation. So from a school perspective, from a learner perspective, a really special year. And I think, I guess we frustrated that more of that success did not translate to more learner growth. But I think one must frame that within a very tough economic climate for South African families. And so if you look closely at the enrollment of learners, the kind of themes are that we saw an improvement in the retention of existing learners. In other words, more families stayed than ever before, and that endorses what we do, how we do it, and certainly the kind of quality on offer. But what we found is that we had about 1,000 less enrollments, new learners. So we enrolled about 14,600 new learners, and in 2023 that was about 15,600. And so, again, if I look at that, it's we would have liked there to be more, but it is a tough economy, and certainly younger families are still taking strain. So we saw good growth in the high schools, but still a weakness in the primary and pre-primary sector.
Could the market just be saturated? And people have been talking about this possibility for some time.
It's difficult for me to talk about the market as saturated. I mean, there are, there's 13 million learners who go to school. There are about 800,000 learners who go to private schools, and another 800 or so thousand learners who go to shall we say, more affluent kind of public schools. So we think there are opportunities out there, but it is a tough economy. And I think, our objective is really to manage a high quality education for the long run. And so we're working very hard at our offering, and we want to make sure that offering is so compelling that we can kind of introduce more families to it. And in particular, I think, once you've looked at the quality of what you do, you also have to consider price.
Sure.
And so we've been reviewing our pricing architecture. From our perspective, very important that younger families, find it more accessible, because it's so important for young learners to get a great start to their education. Sure. and numeracy and literacy and reading skills and all those kind of things. It really makes a difference in the long run. So we're working very hard on all fronts to be both compelling and attractive.
Principals at government schools have been reporting consistently problems with parents who can pay their fees but don't. I realize the situation is different for you. If someone doesn't pay, you can ask the child to leave. Are you finding any increase in the number of parents who can't pay, or I suppose in some cases won't pay?
Look, we have very robust processes to engage with parents early, to remind them, and to communicate formally and properly with them in case of delays in payment or aging debt. So I think we take a firm stance around, we can't offer a service for free. We just can't do that. So we over the years, I think we've raised perhaps the kind of discipline, if you will, of payment, but it's tough out there, and I think it's not so much about parents can or can't. I mean, they make great sacrifices to put their kids through life, and nothing runs in an even straight line. So circumstances change, and people deal with it differently. So I think from our perspective, if I look at 2024, the number of accounts that terminated for either financial reasons or bad debt is actually slightly down from the previous year. But what we did see was that the average value of accounts were a little bit higher, and that resulted in an increase in our debtors book, which we provided against quite, I guess, prudently, given the kind of economic context.
Your learners, as I understand it, write the IEB exams in the main. There are some suggestions. Panyaza Lesufi, the Gauteng Premier, is one of the people suggesting there should be one exam for everyone, no difference between matric and independent schools. And if you look at the two different syllabuses, there's hardly any difference anyway. Would you oppose a change?
Yeah, it'd be difficult for me to have a debate with Premier Lesufi on your show without him, but I think if you just reflect on the absolute numbers, I mean, there's and just by the way, about last year we had about 5,000 matrics. Of that 5,000 matrics, 2,300 of them wrote the DBE exam. In other words, the
government one, yeah.
Exam, yeah. And the other, say, 2,700 or so wrote IEB. In total, in South Africa, I think there's not much more than about 15 or so thousand learners who write IEB and matric. So it's quite difficult to think about, and there's 800,000 learners who write the national exam, so the DBE exam. So quite difficult to kind of feel threatened by 15,000 learners doing the IEB exam. I think fundamentally, we should be giving the best possible opportunities to our learners in whatever curriculum is presented, and that curriculum must be credible, it must be recognized, and it must be high quality and give learners the best chance in life. So from that perspective, it really shouldn't be a debate about Cambridge or IB or NSC or anything. It should be about quality and about giving learners the best possible chance.
Grobus Loebschap, thank you very much indeed. CEO at Curro Holdings.
The Money Show.
Consumer Ninja.
Wendy Nola, good evening to you. Well, insurance often a grudge purchase, but you do need it when something happens. You've actually been looking at some cases where people essentially were never going to get cover for what they wanted it for. What kind of things are we talking about?
Yeah, hi, Stephen. I just see it in the cases that I deal with. You know, people get their claims denied and they come to me because they've been paying this money. They think they've got the safety net. And when they come to claim, they realize they've been basically wasting their money all this time. So the main things with cars are telling the insurer that you are the regular driver of your car when in fact your car is mostly driven by your son or daughter. They're younger, their risk is higher, so that you've been paying a too low premium. If they have an accident, your insurer will find out for sure, because this is very common, and they will reject your claim. Big one in my inbox, failing to have the tracking device that installed in your car that your insurer insists on. The car was stolen. This is also another big one. The car was stolen from the parking lot of, say, a conference center that you were attending a workshop at, and your insurer applies very strictly the fact that you are paying for private use and private use only. So some insurers give you some wriggle room and say, like mine, you can attend 3 things a month or something in that region that are business related and you're fine. Other policies are absolutely you're only covered for private use, going to work and back. Nothing of those 2 addresses. So please check that. There are people listening to this now that are paying premiums and that, you know, don't realize they aren't covered for certain things. And then homeowners insurance. I've had 2 in the last week of these. So that it covers not your furniture and all that thing, the structure of your home, your pool pump, that sort of thing, for your sudden horrible events, your fire, your flooding, that sort of things. And 2 big reasons why these, and they're big monies, Stephen, that, you know, these claims tend to run into the hundreds of thousands, some of them. They say this wasn't a sudden event, this was gradual deterioration and you haven't kept up the maintenance of your property. So we're going to reject it. So it's always a good idea to regularly have your roof checked once a year before the rainy season. All these things many of us don't get around to, but if you do, it makes it harder for them to reject. And then the other one, I've got a couple of case studies, but we haven't got time for, well, certainly not both of them. But they say the construction of your house is non-compliant. Now, I don't know about you, Stephen, but do you know, I don't know if you bought a new build or you bought an older home, do you know for sure whether your boundary wall or a retaining wall or your roof structure is compliant with the building regulations? Do you have a clue?
I have no idea. I imagine most people have no idea.
Unless you've bought a new property, yeah. So that's the thing. And they'll come and, you know, in the one case study, a house in Kilner Park, Pretoria, there was a storm and half the roof got blown off. And then, of course, the rain came in and there was consequential damage to the, you know, furniture inside. It was quite a large loss. And they've said that the roof was not built according to national building regulations. And the guy said, well, it was built 50 years ago. I'm not the first. You know, how am I supposed to know that? And that's the thing. Why I've been saying for decades, literally, if you're going to, I know it's expensive to buy a house, but before you put in that offer to purchase, please, please, please pay a few $1,000 to get a professional property assessment team to come in and do a report and find out what the regulations are, how they apply to your home, whether the roof is A, full of termites, or B, not compliant with the regulations, so that you can walk away, or, you know, I would say walk away if it's not compliant. But people don't do this, Stephen, and these things happen after storms. So I'm banging that drum again because I feel so depressed when I get these stories.
And what happens at the ombud, the short-term insurance ombud? I presume it comes under them when these cases come. I mean, some of it. I find the idea of saying you can't have your car insured or you won't get paid out because you can drive your private car to a conference center. That's going to work. You know, that would surely be a private purpose.
No, that's business related and it's a different address. A lot of people don't know this. So your reaction is really the most common reaction. Surely I must be covered. I actually had someone phone me for one of those, can I give you an insurance quote? And I said, what use? I said, private. And then a few sentences later, I said, hold on. So can I go to a TRCC and the car gets stolen from there? Would I be covered? No. Then you need to take out hybrid. It's a cross between business and private. I mean, a major insurer. So you have to ask these questions and interrogate your exclusions, because there is a lot to lose. And as for the ombudsman, with the homeowners' claims, they put out warnings to say that assessor that comes from your bank to, when you apply for a loan, they're not looking, they've got no clue about the integrity of your boundary wall or what shape your roof timbers are in. They just want to know that there's enough equity in the home to justify what you're paying for it and thus, make them feel comfortable about extending you the loan. You have to get an assessor in. And of course, the estate agents won't tell you this because they don't want to delay a sale.
Sure.
So that's why I keep on saying it, because I see the results, the negative results when people don't do it.
Wendy Nola, thank you very much indeed. Your consumer ninja looking at this tonight on The Money Show. You have to read the fine print when it comes to insurance, as frustrating and as boring as it is. Well, good evening. You're with The Money Show at 7:30.
The Money Show.
Shapeshifters.
Good evening. Well, one of the names you'll have heard about in the business world over the last few weeks is that of Professor John Lamola. He's still an associate professor, if you were wondering, in the Philosophy of Technology department at the University of Johannesburg. But you probably haven't been hearing about him because of that. I mean, you may have, but you've probably been hearing about him because of his new day job. He is the incoming, or is that the current CEO of South African Airways. And there have been plenty of headlines about him as a result. Well, finally tonight, you'll hear from the man himself. John, good evening. It's really nice to put a face and a name and a handshake to a name we've really seen just in the headlines. Good evening.
It's a pleasure, Stephen, and thank you for having me at 7:02. It's a pity that we haven't heard about the chairperson, leader of South African Airways since July 2021.
Yes.
And then from May 2022, I took over as an executive chairperson and as the CEO. So essentially, I've been in the leadership of this turbulent past of the recent SAA for about 3.5 years now.
No, I'm very aware of all of that. But the sort of official, permanent, signed, sealed by, was it the Transport Minister in the end or Cabinet?
Eventually Cabinet.
Okay.
Yes.
You've taken, and let's go back a little bit, you've taken a very interesting route to get to this job, because you've been an academic, and while you've been an academic, you've also been working in the aviation sector. You were at AXA for a while, you were on the board there. Not many people can do both of those things. For most of us, we can kind of do one thing.
I'm surprised at myself that I was able to do that. The aviation thing, as you know, I got into it around 1996. Accidentally, at the end of the elections of 1994, I was working with the IEC and ended up knowing some people in the Air Force who we were working with to distribute ballot boxes throughout the country. And one day I was just doing my thing and they said, hey, at Denel Aviation, they are looking for some guy like you who could help. So I got at Denel Aviation as a public relations person, ended up being a GM. Then I went to study at Embry-Riddle Aeronautical University through Denel's assistance, graduated there 2021. At the time I had my PhD already, of course, but sort of veneering more into...
that was theology though.
No, it was not really theology. It was philosophy mixed with a little bit of economics. When I was doing theology at UNISA, I studied economics and philosophy with theology, because out of the social, we call it social ethics, where there was a concern or then sort of a foresight that one of the critical issues that we will face was the issue of economic justice. And in my PhD, I read Karl Marx and in German. And in reading Marx, of course, we get into economic issues. And yes, economics has always been my interest. So, yeah, it was theology mixed with economics and philosophy.
What were you doing that got you into the IEC in 1994? And I say this because I imagine it was a very difficult, very scary, but also maybe a slightly almost magical, to look back on it now, time to run the body that was managing that. And that was Judge Johan Krichler and all the rest.
Exactly, yes. I'd come back to South Africa and hopefully won't go deep into that, from exile in 1991. And then
Were
I
you
worked
in Germany before?
No, I was stuck in London. That's how I got into Edinburgh. And then did some work as a chaplain for the ANC. I was at that stage, Oliver Tambo tried to set up a kind of we set up a lobbying, re-education of the international religious movement, where we worked with the World Council of Churches, the World Muslim Council, etc. But anyway, when I got here back, I worked with Reverend Frank Chikane as a researcher and dealing with the whole issues of economics in his office. And when he was appointed, one of the commissioners, I ended up with Bayes Nodier running what was called the South African Free Elections Fund, doing vote education, and then that got me into logistics. Later, remember there was a night when a decision was made last minute when the IFP and some other parties decided they're going to join the election. They're going to now participate in election, and the election date. The election time was extended, I think, with 2 days.
Yes.
It was during those 2 days that got me into aviation.
So that would have been the 28th of April, 1990.
Exactly. So because we had to get helicopters from the SNDF, drop ballot boxes all over and produce a temporary ID document because people in the Transkei didn't have IDs to vote because the National Party wanted to frustrate what Holomisa was doing there.
We all have events and periods in our lives that almost transform our lives. Was that one of them for you?
Absolutely. I find that my life has been sort of caught up into the history of things, and my gift of being able to have a foresight, reflectionally, and understanding things beyond the material, technical.
Yeah.
And that's what has also helped me in South African Airways for the past 3 years to see beyond the noise. Remember, there were the issues about Takatso, consortium, and so on. And to be able to say, South African Airways belong to the people of South Africa. And it has to be saved, and it can be saved.
And it should still belong to them 100%.
Well, that's a commercial question. It doesn't have to. I don't believe that it will. In a very, very long run, you can't remain being 100% state-owned. But that decision has to be commercially crafted, and which is one of the things that we are busy with currently. Crafting, not deciding, because there's a prerogative of the shareholder.
I've got a lot more questions about SA. I'm going to come back to them. Don't think I won't. Yeah. I think for most of us, when I think of aviation, it's about getting into the plane and taking off and the thrust you feel and being pushed back in your seat and the wings hopefully not moving. And as you sort of see the ground fall away, it's all very exciting. What are you passionate about in aviation? And I understand there must be a really interesting science about landing slots and fuel and luggage and management of an airline. Why are you passionate about it?
It's the technology, the miracle of having this giant machine being able to sustain itself in the air, as well as what the industry does in enabling people to connect with each other across cultures, across countries, and the whole history of aviation. Civil aviation started as a military aviation. It's only around, people started actually flying in 1903 when the first flight happened. And then from there it was all, the Second World War generated the whole technology of the engine and so on, mainly by the German Nazi technological
the ME-262 and all of that.
Yes. And it was only very late, it was only around 1971 that we had a Boeing 707 and the whole evolution of the technology in the industry. I did my, when I was doing my MBA in aviation, I wrote my dissertation on the obsolescence of of aeronautical technology, where I did a study on how there was Boeing 727, how that became obsolete and was to be the next generation was Boeing 757, and that continues. A fascinating industry in that respect, and the cost element of all of that, of how expensive these machines are, and how the airline industry must extract profits out of this major capital-intensive and highly regulated industry.
I mean, some people claim, I don't know if it's true, that there's some Boeings that have spent more time in the air than on the ground.
You have just to be a super airline management or manager who will be able to do it, because that's the idea. The idea is this aircraft make money when they are in the air. But I think that will be, it's a bit of an exaggeration. It's not possible.
I looked at some of the titles of your academic work, and obviously when you went to SAA, you did not, you didn't produce as much, I presume. I found some of them interesting. The last two published papers I found were Blackhood as a Category in Contemporary Discourse on Black Studies and Existentialist Philosophical Defense, and Biko, Hegel, and the End of Black Consciousness. Yes. And obviously there's a theme here around race. And I presume, it should be a major interest to all of us, but I presume that's still a major interest for you. I mean, South Africa, one of the reasons South Africa is a fascinating and difficult place is because of that.
Yes. When I re-entered academia in around 2011, I started as a lecturer at the University of Fort Hare. My research theme was on a quest for the redemption of the selfhood of a people whose selfhood have been destroyed by a social system of apartheid, because apartheid was not only destructive of the infrastructure, but how black people were perceiving themselves. But not only black people, but also white people were perceiving themselves, which was Steve Biko's major discovery. The issue about the superiority complex, inferiority complex, and his dream of a true humanity where we will all perceive ourselves as normal human beings. His famous paper, 1973, Black Consciousness and the Quest for a True Humanity, is very important. So at that stage, there was a fascination because I studied philosophy, German philosophy, Hegel. Hegel is the progenitor of Marx and all of them. And in the beginning of that time, early 2009, just after around the World Cup, I don't know what it was, we were fascinated. It was a movement to say there is African philosophy. Yeah. There is not only German philosophy, Dutch philosophy, and we're saying people like Steve Biko have been philosophers. And we were part of that decolonization. Okay, not part of, maybe precursors, because the students were demanding to be taught about their environment, not about the history of lands out there. And then while I was doing that, I was called to be the director at the airports company, South Africa.
It's fascinating. I mean, we could talk about that all day. Maybe we should, but I do have to ask a few other questions. This is the tough part of the interview, by the way. Good. There was a lot of reporting about your appointment, and there were lots of headlines. Lamola, the worst candidate. And I mean, you weren't the worst candidate. It was a short list of 3 people. Okay, yeah. You can't say you were the worst candidate. But that can't have been very easy. I mean, for you or your family or anyone who knows you, And this happens in South Africa sometimes with certain appointments. Things become very public. There's a dispute of some kind, questions. How was it for you?
But Stephen, no, it turned out to be a blessing in disguise. First of all, very few people have had their appointment discussed with the state president, to be a mere, it ends up with the minister. But from what I'm reading, this thing ended up being discussed.
You don't know what you read.
Exactly. So it has been a blessing in disguise in 2 ways. In that, primarily, actions speak louder than words. Yeah. So I am more invigorated to prove wrong those who have questioned that I could have led SAA. But And then I feel sorry for them because out of ignorance of where SAA has come out of under my leadership with the collective around me and what we went through during the past 3.5 years and to where we are today. And fortunately, what motivated me, it was reluctant, Steve, it was reluctant for me to participate in this because I have other things in my life to do, but I'm also a farmer. I have an academic career. I've had my own other little businesses. So I was not really aggressively fighting for this job.
Sure.
But the business plan, we call it a corporate plan, that we have crafted over the past 9 months, actually it's now 11 months. Remember, on the 13th of March, Minister Gordon, God bless his soul, had a press conference last year announcing that the Takatso Consortium SAA will no longer have an SCP, and from hence on, it will not get any money from the fiscus. So we had to go early last year and craft a business plan that can demonstrate that South African Airways will survive on its own. And we have worked on that plan, and I just wanted to have a chance to demonstrate that plan before I get out of the scene.
No, that makes complete sense. You drew it up, you want to execute it. I think what people may worry about is the history of SAA, and a big part of that troubled history, I'm talking, before the pandemic now, was because of the people who were deployed. And they were deployed. And I'm talking about someone like Dudu Myeni, who no longer qualifies to be a director because of what she did. And I think there's a risk that some people see you as someone who's deployed. Now, John, you're not Dudu Myeni, okay? I'm not making that comparison. Is there an assurance maybe that you can give that you're not leading SAA as a deployed person from an organization you were once a chaplain in, but as a CEO?
Simply, I was not deployed. I was called in July 2021 after I have just assumed my position as an associate professor at UJ. And not even by Minister Gordon himself. I mean, he learned later that I was identified as someone who could lead SAA for 6 months. Mr. Krena was the chairman of SAA as it came out of business rescue. So I was called one day, hey, Chief, come and help us for 6 months. There was a negotiation with the Vice Chancellor of UJ. He said, okay, Lamola, you go there, but 6 months you must be back. We need you for X, Y, Z at the university. And it was not a deployment. So things grew from there, from step one to where they are today.
So you will lead SAA as a CEO, not as a political...
Oh, no, absolutely. And that I can assure you, and we have demonstrated it. I am working with the whole spectrum in Parliament currently of the Portfolio Committee, even before, during the time of DPE. It is a very exciting setup that we have been lucky enough to swim through during the past 3 years.
We're speaking to Professor John Lamola. He is the CEO at SAA.
The Money Show.
Shapeshifters.
Professor John Lamola, the new, formally appointed CEO of SAA, is your shapeshifter tonight. John, I have a memory of living in London as a much younger man, at a different time when you were there, 25 years ago. And that moment when you kind of think you're going home and you're at the airport, and I suddenly knew that I was going home, and I would see an SAA flight, and I'd see the plane, and I'd see all the South Africans gathering together. And you could tell South Africans, it doesn't matter how we dress or how we look, you can tell from the way we walk, the fact that we greet people and that we're not British. And there's something interesting that a plane, just the tail of the plane with those colors, could make you think of home. What I'm talking about is the power of the brand of SAA. How are you going to, and it faces tough competition now. There's one domestic competitor who I won't name, who are ferocious. You know who they are. They're very strong. How are you going to compete?
We are, with the local competitors, we are not competing really, we are competing. Because we are now located into a Department of Transport, which has a mandate of ensuring that South Africa has a sustainable airline industry. But secondly, we have decided to differentiate ourselves in the market by looking at the core competencies of South African Airways. Our competencies that differentiates ourselves is that we have long-haul, wide-body aircraft. Therefore, we're the only airline in South Africa that has to do intercontinental flights, that has to really, according to the legislative mandate of SAA as a state-owned entity, that connects South Africa with all its key trade, commercial, and tourist markets. So we see ourselves as different and as a premium airline that is let's work on a connected, globally connected network. Yes, the feeling that you have explained, Stephen, is as all South Africans can tell you versions of it. But for us as a flag carrier, we realized that our branding came in the current branding in 1996, after the new flag of South African Airways. So that brand and the brand of South African Airways, we're very much surprised when we started launching in 2021 that while here in South Africa we're having debates about should this be allowed to fly, should we put money into it, Africa, where we went, Malawi, Lusaka, Lagos, Accra, were receiving South African Airways as their own airline. They were very excited to see us back, knowing what that flag, where from the South African flag emerges from, given the history of support of the changes in this country.
So, I mean, in a way, one of the most important things SAA did before the pandemic was flights into Africa. And I used to love going to OR Tambo, and you'd see all of these locations, and then there was a sort of different section, Lubumbashi and places like that.
Indeed.
I have friends who work in the agricultural field who say that without that, their businesses wouldn't have worked. Are you going to be able to restore some of that?
Yeah, exactly. We have just Lubumbashi and Dar es Salaam we launched now 2-3 months ago. And then we have a plan, but unfortunately, this SAA version 2, as we call it, is strictly all the business plan is premised on very, very strict financial and economic analysis. We don't launch a route because some politician want it. We do it after
don't give one up either because some politician wants it. Yes.
So we are doing continuous, very thorough analysis of all the routes. We are careful not to grow very fast and unnecessarily. There is a global shortage currently of aircraft, which is a constraint on how fast we can grow because of what the industry has gone through, the Boeings, the Airbuses of this world during the COVID period.
Professor John Lamola, thank you for coming to talk about theology, Marx, Hegel, Steve Biko, and a little sidetrack into aviation. Thank you for coming in.
Thank you so much. It has been a pleasure. Thank you.
Professor John Lamola is the CEO at South African Airways.